Let's rock and roll. Hey, this is Trader Travis. I'm back from the land of sickness. I'm not coughing up any lungs. My Success Academy co-trainer, Peters, on the line with us today. We're here for another weekly recap where we'll cover our trades, general market, give you our thoughts. This is all for educational and informational purposes only. This is not investment advice. Don't go out watching free videos. If you're a non-student, not having mentorship, don't go out watching free videos online thinking you're going to become an investment pro. It's dangerous at best. I'm old school in my thoughts, and I believe that one of the best ways to learn any skill, doctor, lawyer, pilot, is the path of mentorship. Of course, I'm biased because I am a mentor, but hey, that's just my opinion. Take it for what it's worth. So what I'm going to do first is cover the general market. I will have one more stock for you today, and then Peter will take over sharing his trades. I have a
Yep,
little
I
updating.
got it.
Okay. I have to update my Excel. Members, I placed a couple of trades on my monthly trades I placed on, I think, Monday or Tuesday. Again, just reminding everybody, this year I'm trading about once a year. Once a year. I wish it was once a year. I'm trading about once a month now. Set it and forget it trades, going back to my preferred style, and then I just casually manage my trades throughout the month. The trades I placed were bullish in nature because looking at the general market here, the market is still on a tear, going up. So give me one second. My camera's in the way. I just want to hide my camera. All right. So we have the market still going up. The message is telling us it wants to go up. A couple of people I know, Peter, we talked about how we're nervous. This is unsustainable. Moving averages should come together a little bit here soon. They have a lot of spacing. But until that happens, I mean, we have to trade what we see. Peter and I were talking actually before we started recording how some people are obsessed with understanding why the market does what it does. Like, why is it up today? Why is it down? And he was like, if you knew the answer, would it really matter? And I was like, well, no, it's still going up or still going down. Like in this case, it's still going up. What does it matter? The reason why it's going up, right? So we should get in alignment with that. When it changes, we'll see it in real time. It's not like we'll be surprised. You may feel surprised, but it always falls right in front of your face, and you just kind of see it in steps. One of the things we use is the four stages, and as you can see, the four stages are now reversing. Well, that shouldn't have been a surprise to us because we saw it as it happened. You know, it started with the 7-day moving average turning up and starting to head up, then it eventually crossed through 30. See, it happens in stages, and we just pay attention to the stages. Sometimes you get so caught up in your head, like, oh, the market's going to fall again. That's a dangerous habit to have, and it took me a long time to break free from that. But it makes it easier when you keep losing money because of it. Then it makes it easier to break free from that habit. I've just trained myself over the years. Trade what I see, not what I think. And anytime I trade what I think, I tend to lose money in the long run. So right now the market's still going up. That's the way I'm trading. And so all of my trades I placed were bullish in nature. I do have, I'm going to give you today I'm in a live, oops, let me pull this up. Don't want to show you my email. So today what I want to do is show you like an example of how I find stocks. Like, okay, I pulled up Market Club, and Market Club showed me that, okay, these two stocks had monthly green trade triangles. Monthlies are long-term signals saying, hey, the stock will go up in the next few weeks to a few months. And so when we pull them up, so let's pull up, I have SPY up because it's weird. Side note, SPY triggered for green monthly here, but the index on Market Club, the S&P coming back to the top option scan here, we can see that the index S&P 500 still hasn't triggered for green monthly, so that was kind of odd. But the actual ETF did trigger for a green monthly, so maybe the index is right behind. I'm not sure, but I just wanted to point that out, that little discrepancy there. But anyway, sorry. So now we look at Monster Beverage, that chart that Market Club signaled for monthly. This is a 5-year chart. We can kind of see in the past how it has reacted to the monthlies. And for the most part, it looks like you could have made money over the 5 years. So I was like, okay, that's great. It's one signal. I could trade that per that signal. But I have a filtering process I go through. This is just one of the steps. Okay, the next one was DAR. This is a 5-year chart. So the chart looks okay. And this one is another nice one where if we had traded these monthlies, we would have made a decent amount of money. But I am a mix. I'm a product of my mentorship, and my mentor taught me to not just look at technicals, look at the charts, also look at the fundamentals. Like, is a company actually making money? Because a company's revenue increasing is really what attracts institutional money or big money to it. And when they buy or sell, that is what pushes the stock and makes it move. And so that's another part of the filtering process. And I just happen to use Investors Business Daily. You could use finance.yahoo. Pretty much tells you the same thing, just in a different format, where you can research the fundamentals of a company. Okay, so DAR, all right, we looked at DAR's chart. It looks great. But then when I come over here to Investors Business Daily, it tells me the composite rating and rates these stocks from, like, I don't know, 0 to 100. The rating is not so hot. I'm like, I don't really like that. And if we scroll down, it'll let us know, how their earnings and things like that. And so this one I would pass. Yes, the chart looks great, but Investors Business Daily is telling me something's not right internally in the company. And so I pass on that. No matter how great the stock looks, no matter, how much I love Market Club, I just simply pass on it. Because what I'm trying to do is I'm not trying to trade any and everything. I'm not like a dog chasing every car that runs down the street. I'm trying to wait for the best of the best. It's a probabilities thing. We put the probabilities as much as in our favor as we can, and this is one of the ways I do it. Does it mean I'm always going to make money? No, that's just part of investing. Losses are normal. People have to learn how to accept that. But putting the probabilities in our favor kind of helps us out. As a matter of fact, if we look at all the stocks I recommended to you in February, you can look up all these stocks and see. I'm not going to do it now, it's too many stocks, but you can look them up to see how did they perform. I went through the filtering process I'm showing you right now with every one of these stocks, looking at the technicals and then looking at the fundamentals. So you all can pull those up later and see how they went. But anyway, moving on here. The next one, Monster. Okay, we already looked at the chart. Let's pull Monster up in Investors Business Daily. And we can see the fundamentals better. The composite rating is 97. And I think the highest you can go is 100. So this one would pass for me. And so that's step. I don't have steps in my filtering process. That's another step in my filtering process. It passed that filter. But your job, and here's where I would recommend it to you. But as Peter I'm glad he pointed it out, because I always forget to tell people, because I just assume people would know, like, that's just not it. Like, you don't stop there just because I gave you a stock. I can't spoil you here and do everything for you. Like, you still have to do more work. You have to pull up the option chain to see if, it passes that filter, the option chain filter, the pricing filter, the bid and ask spread filter. See, all these little filters we look for in the Success Academy to put the odds in our favor. And if it passes all those filters for you, then hey, if it fits your budget and you have room in your portfolio, then you can trade it. I'm not trading it anymore. Looking at my spreadsheet, I told everybody this year I'm mainly trading SPY or the S&P 500 this year. Very few stocks. I'm in like Starbucks, MasterCard right now. What else? PayPal. And I'm not trading that many stocks this year. I just don't have the mental capacity to have a lot of moving parts in my portfolio this year because of personal matters. My life got a little bit more complicated. So I am simplifying what I do. And so I'm staying away from stocks that take a lot more time to manage the trade than I have right now. So I just hopefully won't take too big of an income hit. But we've already talked about that, I think, on the last week's recap of how you have to alter your investment style to what's going on in your life at the moment. If you have cancer or sickness, things like that. Like I was talking to my mentor, and he was saying one of his clients' daughters got sick and she had to go like cancer treatments and things like that. And so he had to change around his business, while they were going through that. It's not like he just kept doing the same thing over and over again. He had to change his role in his own company until they got through that season in their life. And it's the same thing with investing. This is a business. This is not some little fun hobby we do. This is a business. You have to treat it as such. And so it's like I told one of the members, if you just went on vacation, like, would you just if you ran a store, would you just leave your store open and people can just come and go as they please and shop without anybody monitoring them? And that's kind of how I look at my trades. Like they're little miniature stores. My MasterCard trade is one store I'm managing. And so, I don't want a bunch of stores right now because my life's kind of complicated. I can't manage a bunch of stores. So, but I can manage like 1 to 2 stores at a time, and kind of keep an eye on them. So that's kind of the, I guess, frame of mind I want you all to have. And with that, my brain is having a brain freeze now. I'll turn it over to Peter. That's the most talking I've done in weeks. So
that's good. I mean, like I said, when we first got on the call, it was amazing how much better you sound from just a few weeks ago. So
yes, it's good. How you doing? Yeah.
Yeah, it's good to have you back.
Thanks.
Okay, you can see my screen, right?
Yep, I can see it. Yeah.
Okay, I'm just gonna hide my window here. I know you can't see this. You can edit this stuff out. Okay, so I don't have a whole lot to cover here, you guys. So I'm just gonna go into. Was it last week I talked about these trades? I think so. I think last week I had gotten into these trades, or I got in right before we did our recap last week. 3 trades I was in, and again, Travis kind of talks about this. I think if you're, I wanted to piggyback on something he said. I think if you're starting out with this, and you're just learning it, or you've been, let's say you went through a process, you've learned it, and now you really want to put all your education to the test. I think your best place to be is ETFs. They won't play with your emotions, number one, and swing wildly. Like you can see on my chart here, IYR is probably one of them you might not want to work with right now because IYR does swing a little bit wilder than the others. But if you look at like SPY, DIA, QQQ, IWM, those are all, I think EFA is another good one. Those are all really good ETFs that you can work with that will not play with your emotions in the trade, because that's one of the hardest things to do. So speaking of emotions, so let's get into what I'm doing. So I had IYR was one of my trades. I have, just like Travis has taught us, we have a system. The best way to put it is when we come up with a trade plan, we have a trade plan that says, if this happens, then I do this. It's really that simple. It has to boil down to something that simple so that you are not a gambler in the market. You are a trader in the market, and you're doing things based on a real plan. If this happens, then this is what I do. So I got into IYR, IWM, SPY. I'll go through all 3 of them. IYR, I got out right before we got on this call. I exited those positions. 2 things happened to me. Number one, you can see prices close below this 7-day. This green line is a 7-day moving average. And when prices close below that for two straight days, that's a caution signal, and it's typically an exit signal for me. Now, I was away when this happened, and I could see that it did that, and I was like, okay, I'm okay, because this was the day I should have gotten out. I was coming back that day, so I was like, okay, I'm okay, because I can get out the next day. And I was going to get out yesterday, and I got busy with work and I didn't get out. So I got out today. So yesterday I would have taken a 23% loss. Today I took a 47% loss. So not really that not that bad because of the way we trade and the amount. This was 0.5% of my account. So a 50% loss on 0.5% doesn't it doesn't hurt me, right? It's easy to come back from. Now I'm going to cover something real quick. Travis and I wouldn't do this. This is my thought process. Again, the stock market, the ETFs, they don't care what I think. I trade what I see. I traded this at the time because it was going up, even though I kind of had some suspicions that it would do what it's doing right now. But I don't want to trade that way. I want to trade what I see. Today, I have suspicions. If you look at today, it's hitting a resistance point. This 30-day moving average is a resistance point, right? So, or we could call it support, not resistance. It's a support point. So it's bouncing off of that. Travis and I were joking about it. We're like, well, this is probably going to go up. It's probably going to bounce back, and maybe the 7-day gets really close to the 30 and then it bounces off and it starts going back up. Would I be upset if that happened? Absolutely not, because if that happens, I'm going to trade what I see. If it happens, I'm going to get back into an IYR trade and sell a credit spread, and that credit spread is going to pay more than what I lost on the one I just exited.
Yep.
And I wanted to bring that up because if I do it the other way, if I didn't do it this way, and it doesn't do this, and the 7-day does crash through like it did over here, well, now I'm going to lose 100%, and I'm going to be in worse shape, and I'm going to have to wait a long time before I can get back into it to even make back that 100% loss. So never a good idea. Trade what you see. And with my trade plan, it said, hey, Peter, you hit your exit strategy, get out. So I got out. So moving right along, I went on way too long for what I was talking about, but that's okay. Hopefully you guys don't mind. Having a hard time here. All right, so IWM has not hit. It started to pull back. You can see, it started to pull back here, but today it's back up above its 7-day, so it hasn't hit my any of my exit criteria. So I'm good to go. I'm watching this one though because you never know what it can do. These moving averages usually like to come back together, and that's what I'm expecting. So I'm gonna watch it, but right now it's in good shape. I'm at a 30, I think a 27%. Gain on my credit. And what that means is, I was given money when I sold. When I can buy it back and keep 80% of the money I was given, that's what I do. So I have a good to cancel order in. So if it hits the 80% profit margin, it goes in, it executes for me, and it gets me out of the trade. But there's no guarantee that that's going to happen. It's got 28 days, so we'll see what happens. Things are looking good so far. And then same with SPY. Again, you can see had a slight little pullback here. I saw it come over to the 7-day moving average. I was a little concerned that it was going to continue that way down. And I was paying attention to it. And if you look at today's a down day, but it started up, so it's above that 7-day. So I'm in good shape again. This is at a 32% gain on my credit. So, with 28 days, time will start in the last 30 days is usually when you start to see that time really start to tick away. So time will start ticking away. And if SPY keeps doing what it's doing, because right now it's out of the money, it's not really far out of the money, but if it keeps just petering along like this and just stays around 278, actually I can let it go to 277 and I'm good. If it stays that way, I'll be in a good position to maintain 80% of that credit. So, and then I don't have any new trades that I'm working on because next week I'm going to be on vacation, so I won't place any trades that I won't be able to really monitor. So I have these three. I've got my good to cancel orders in on them. So if they hit their profit margin, but I'll pay attention to them each day while I'm on vacation. If I get an exit, I can exit them. But I won't want to place any new trades and have to manage any new trades. So that's where I'm at.
Yeah, it's a read between the lines tip there. For people. Like, people always ask, should I place trades while I'm on vacation? I was like, it really depends. You don't want to make the mistake I've made where I'm on a cruise and I'm trying to scramble to get internet. It just totally ruins your vacation. Like, no. So either don't place trades before you go on vacation like Peter. That's option A. Or option B, you place set and forget trades that won't take any babysitting. They don't take babysitting and they can wait until you get back. And that could be longer term trades or really, really low risk trades where they risk like 0.1% of your account. That way you still have things in play until you get back. So those are some different options for you all. All right.
Yeah, I think after that vacation, I'll be kind of back in the saddle because took a lot of time off. I went back to Connecticut because Lauren turned 21. So that kind of, a couple days off there. And then next week I'm going to be playing golf up in Myrtle Beach. So I definitely, based on my tee times, there's going to be no way I'll have any chance to, I'll have to, if I have to exit any of these trades, they'll be pretty much automatic exits, because I won't have the time to do it for the most part. But again, going back to the way we do our 210 formula, these weren't even at the 1% of my 210 formula. So I don't like to lose money. Don't take that the wrong way. It's not like I like a losing trade. But I am far more comfortable, like on my IYR trades, a 47% loss sounds like a lot, but just to kind of break that down on my small trading account, I lost $26. So it's not a that's not that's not a bad loss,
No,
so
manageable.
it is. So anyway.
Well, so you won't be with us next week. So for those who like Peter, you can tune out for a week and come back in a couple of weeks when Peter's back.
I'm sure they won't. Okay.
I think I can manage it. They can suffer through seeing my face only for a week.
Suffer, yeah. You guys get more tips from Travis than you do me. He's a master too, so.
We'll see. We'll see at the end of the year if I'm still a master. All right, everyone. Stay safe. Don't forget, I haven't talked about it in a while. Don't get too laid back as far as portfolio insurance. Still always keep that in the background of your mind. Everything's about protection. I was talking to a member. They were asking me, one of my trades a long time ago, my IBM trade, I talked about where I lost 13 grand in one day. They were like, could you use a stop loss? What things can we do to make sure we don't lose a lot of money? And it's funny when I get that question because my mentor, I was like, oh, duh. He was like, usually the best solution is the simplest solution. It's so simple. It's right in front of our face. We don't even consider it. He was like, the best way to not lose a lot of money is never put yourself in a position to lose a lot of money. And I was like, once you really meditate on that, think about that. The best way not to lose a lot of money when you're investing is to never put yourself in a position to lose a lot of money. Issue solved. And there are several ways to accomplish that. But, the people who lose a lot of money, who suffer, who always have these account crippling losses, they always put themselves in that position. And one way you cannot put yourself in that position is by insuring your portfolio. Yes, you can use stops and things like that. I don't personally, but there are a lot of little techniques you can use. But just think about that. Just never put yourself in a position to lose a lot of money. You don't have to worry about it. And with that, we'll bid you all farewell, and we will see you next week's recap. Bye.
See ya.
All right.